Good morning, everyone. Welcome to Pre-Bell with William O'Neill India. My name is Rajashekhar Kongari, Equity Research Analyst, part of MarketSmith India team. Disclaimer for this podcast presentation is registration granted by SEBI, membership of BASL and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents before investing. It's very important to understand the Nifty's price volume action to gauge the market and to get to know the short-term view for the market going forward. If you look at Nifty on a longer time frame from March, it has been in a very good upward trajectory. There have been a few occasions of volatile actions and selling pressure happening. However, overall trajectory has been on the upside. This major selling is due to weak earnings by the IT companies. However, apart from these, most of the companies have put a good set of numbers, and Nifty has taken into those numbers, and there was good buying happened in the market. Recently, in this current week, if you see in the last 3 trading sessions, Nifty's action has been very similar. We have pointed out this in the yesterday's evening mailers as well. On the opening basis, Nifty was able to open on the higher side, and in the first half an hour, Nifty is making a intraday high. After that, Nifty has been coming under pressure and selling has been coming into the markets. On closing basis, Nifty has closed near the day's lows in the last trading sessions. Yesterday, also similar action has happened. Nifty opened higher, but on closing basis, it closed in the almost near the day's low, and volume was also on the higher side. So this is not a positive sign for the bulls. We would want the volume to be on the lower side when the Nifty is declining, and when the Nifty is advancing higher, we would want the volume to be on the higher side. Talking about O'Neill's perspective from of this market, we are continuing to be in a rally attempt. We have been waiting for a follow-through day. That is the reason we don't just go into the market with 100% exposure towards the market. We need a good conviction before going into the market. Follow through day helps us giving us the conviction, even though Nifty has advanced more than 1,000 points, but the conviction has been on the lower side. There has been volatile actions and selling happening here and there. So the clear uptrend is not there yet, but we have been adding stocks to model portfolio, the stocks which are clearly outperforming the market, which have reported good set of numbers and which are placed very well on O'Neill parameters. We have been filtering these kind of stocks and adding them to model portfolio, and we have kept a huge buy watch list of around nearly 20 stocks which are placed very well at the current moment. And any of these stocks, if they come under radar, that is into the buy zone, then we'll add them to the model portfolio. But to increase the probability of success of these breakouts, we would want the market to create follow through day. That is when Nifty will definitely rejoice, and the broader markets, if they join the party, then definitely we'll see more and more breakouts being successful. As the ending season is going on, a few major companies have reported their numbers yesterday after market close. Indigo, which is a low-cost air carrier, Interglobe Aviation, has come up with their March quarter numbers. Operations, that is revenue from operations, has increased more than 76% year-on-year basis to 14,000 crores of rupees. For this quarter, that is March quarter, the company was able to report a profit of 919 crores of rupees when compared to a loss of 1,600 crores in the same quarter last year. Bata India, a major player in the footwear industry in India, has come up with their numbers as well for the March quarter. Revenue from operations increased 17% to 778 crores. Profit was up only 4.4% to 65 crores. So this is mostly because of weak operating margins. On one side, sales grew 70%, but the profit grew only 4%. United Spirits, McDowell's, commonly known as, has come up with their numbers as well. And revenue fell 0.3% to almost 2,500 crores. Profit grew 7% to 204 crores of rupees. Wipro, a leading IT company in India, has announced a 5-year partnership with ServiceNow. This agreement will help the company's goal of achieving $1 billion of business with ServiceNow by the end of 2026. Nexus Select Trust, a leading real estate investment trust, commonly known as REIT, will debut on exchanges today. The issue price has been fixed at 100 rupees per unit. Apart from these, the companies, there are other companies which have reported their numbers as well, but these are the major companies in terms of market cap and growth trajectory. These are the two major companies. Apart from these, the companies such as Punjab National Bank, JSW Steel, Zomato, NTPC, Power Grid, Cochin Shipyard are other companies which will be reporting their numbers in the today's trading session, mostly during market hours and after market hours. Talking about the global market update for the overnight, US market closed in the positive territory. Dow Jones closed relatively lower, that is 0.3% higher, whereas Nasdaq and S&P have closed more than nearly 1% higher. Apart from Shanghai, which is trading on the flat basis, Nikkei and Kospi are trading relatively higher. Kospi 0.6% higher, Nikkei more than 1% higher as we speak. SGX Nifty is also indicating a higher opening for the market. Indian market yesterday closed around 18,130 levels. So 50-60 point higher opening is expected on the Nifty index. But this has been the theme for the last 3 trading sessions, as mentioned previously. Nifty was able to open on the higher side, but on closing basis, it was celebration has been coming into the markets during market hours, and Nifty is not able to hold on to the opening gains. But if the similar action happens today, then we might see Nifty coming towards its moving averages as well. Currently, it is very close to its 21 DMA, which is a green line. So today, in today's action, if the Nifty comes towards this level, we would expect a support from the 21 DMA. But if that level is breached, then we might expect a further selling happening into the markets. So please be very watchful of your positions in the market. For the chart of video, we picked West Coast paper. It has been added to our buy watch list as well. Stock has been forming a very long cup with handle base pattern. A very good base pattern if you look at, if you study price volume action. Currently, it is trading above its key moving averages. Ratings wise, EPS of 78 is very good on fundamental front. Technical ratings are also fair enough. Price strength of 71 and ABD rating of B+. Mostly the stock has moved sideways recently in this area. That is the reason RS rating has also come down slightly. If the breakout happens on higher volume, then definitely RS line will trend higher and RS rating will also improve. You can see the growth trajectory the company has reported the numbers. EPS consistent triple digit growth. Sales have also grown higher double digit and triple digits, which is a very positive sign on current earnings front. Another major factor which we look is I factor, that is institutional sponsorship for the stock. This is one set of area the company has shown very good strength. On each quarter, the company was able to attract new institutional funds, and the amount of increase of these funds is huge in the last 2 quarters, a positive sign again. This is the reason stock is able to find support at its key moving averages, because institutional funds will try to give support to their holdings and the market is under pressure. They try to give support to their stocks near 50 or 200 DMS. Overall, on slim methodology, the stock is looking very good, both on fundamental and technical front. If the stock gives a breakout, that is another 4% from here on very good volume, and the market structure stays intact, then we might add it to our model portfolio.
if you are holding this stock in your portfolio, you can keep its 50 DMA as a stop loss, which are very near actually. 50 to 100, 100 DMAs are very near. So, a couple of points below those levels will act as a good stop loss.